Right. Well, let's get to the next stock, Titan. That's the one in focus that had a couple of one-offs in the past quarter. But what's the trajectory and how are things looking from here on? To help us out with that, we're joined by Mr. CK Venkataraman, the Managing Director of the company. Hi, sir. Good morning and good to see you, Ben. Well, let's start off with the largest part of your business, the jewellery business. Out there for the first 9 months, you've grown by close to around 26%. And margins, adjusted for a couple of one-offs, it's at around 11% approximately. What kind of growth trajectory you expect to continue on the jewellery business for this year? And is this 11% the new normal in terms of margins? Are there levers you have in store to push it a little bit higher?
Hi, morning everyone. The overall opportunity for the jewellery business of Titan is very strong. The brand and the set of brands we have are all much desired. Together we have at best a high single-digit share. There's an acceleration in the formalization of the category. The kind of customers we cater to are sitting in the top 1/3 of the income pyramid, and the long runway in the growth in the numbers of those customers, as well as their income and wealth, is pointing to a long, growth for Titan's jewelry business. The one uncertain thing in this is the price of gold and the fluctuation and short-term fluctuation in the price of gold, like what is happening even as we speak. But barring that, the runway is very strong. So we expect to continue to do well over the next, many quarters and many years. Yes.
All right. I would appreciate if you could give us a number. Is there a number you look at? You can continue the current momentum, 25% growth because formalization of the industry and the big potential. Should that be a fair estimate? And also, I wanted to ask you about the studded ratio. That's come down to around 23% or thereabouts. I recall you used to be at 30+. So a couple of questions out here. Where does this number stabilize at? And so much of talk about lab-grown diamonds, but I believe the risk to this particular category is only around 10% or thereabouts. Could you give us a number?
Actually, the growth which we typically look at every year is in the ballpark of 20% from an annual point of view. And that's the kind of thing that we would be satisfied with rather than continuing to maintain the 25 in every quarter. So that's the answer to the first point. On studded, actually the studded growth in Q3 has been very good. It's because of an even higher growth in gold and gold jewelry, as well as spectacular growth in gold coins, has depressed on the face of it the share of just mathematics. And we are not really so much bothered about the share of studded jewelry as much as the growth in the studded jewelry category, as long as it is in a respectable level, which it was in Q3. We are okay if the share falls because it's the total scale of the business in such a situation that is rising rapidly, and the total gross margin in rupee terms that will rise and give the leverage for profit growth. And
so you're okay with it being, sir, in the early 20s, 22, 23% is okay for you?
I'm not saying that. What I'm saying is that is a result of the combination of the growth in studded, growth in gold jewelry, and growth in coins. We are very particular about the growth in studded jewelry. I mean, I'm just saying hypothetically, if the gold jewelry were to grow 50% in a particular quarter, despite the studded jewelry doing whatever we think it should be doing, the share will fall. But the total gross margin, the total sales will be much strong. That's the point I'm making. So I'm not saying we'll be satisfied with 20 or 22 or anything like this. I'm telling you why the studded share is low, despite the studded performance being on target and strong.
All right, Mr. Venkat. Right. No, got that. It's a function of how the portfolio shapes up. Good morning, Prashant here. On the margin front, sir, could you give us a sense? Is the new range between 11.5%? Is there pressure? Broadly, is there pressure here as you see it? And what could be the upside triggers, really?
Hi Prashant, given the long runway in terms of growth and our having just a single-digit market share, our focus continues to be on sales growth and with a stable margin around that 11% ballpark. That's what I would gun for. That's what we are pushing for. And from an overall business performance point of view, the return on capital employed of the business, of the company, is very strong at this level of margin because of the overall capital turns of the company being, at benchmark levels. So since we are a very well-performing, company, we would like to focus on the sales growth while maintaining the margin in the 11% ballpark.
Okay, and on just a very brief comment on lab-grown diamonds specifically, you are the overall sort of leader. How are you seeing adoption rates in the, not just for you, but I mean otherwise as well, not just for the group, but otherwise as well in the industry? Is it very fast? Is it slow? Just a sense.
There's a lot of action, there's a lot of activity, a lot of brands, a lot of stores, a lot of visibility and all that. And I think in the early stages of any category, that visibility, that noise will sort of suggest a certain level of actual performance, which is not really on the ground like that, but that's okay. That's how it is. It is certainly a very important development in the jewelry category. It's a very interesting product. Titan's own strategy will be shared as and when, we are actually ready to share it. But on the ground, even in concentrations where we have a lot of lab-grown, stores around us, we are not yet seeing any major conversation around the LGD. People are appearing to be more interested in reconfirming that, that they're buying naturals and all that, as opposed to actually wanting to buy LGDs. But honestly, early days, so I wouldn't...
Mr. Venkataraman, sir, morning, Surabhi here. But, if I could ask you to expand on that point, because now whether we're looking at the studded mix or whether we're looking at Carrot Lane, our colleague Maglam tells us that the growth has slowed down. It's at 27%, but it used to be much higher, the growth for Carrot Lane. Now, we don't know if this is a transient impact of some shift to lab grown or not. But my question to you is, A, on Carrot Lane, what would the expectation be? And the strategy that you said, that Titan will reveal the strategy in due course. When, sir? And my simple question is, why not also give the lab-grown offering? I mean, maybe once the customer walks into your store, instead of going to some A, B, or C lab-grown diamond, retailer, maybe you can convert them to naturals as well. Why let the customer, go anywhere else? Why don't get all the footfalls by offering even lab-grown and then trying to, upgrade and upgrade the customer? By when can we have that strategy?
On the first point, if you look at the performance of Carrot Lane, it's actually between Q3 and Q2. I mean, Q2 and Q3 have been rising. The overall profit performance of the brand has also risen. And we'll have to see the portfolio of, Carrot Lane is substantially in the less than 1.5 lakh price points. Mia, which is another strong brand of Titan Company, is substantially in the less than 1 lakh. Tanishq itself also operates. So we'll have to look at the total between these three brands, the less than 150,000 price point, how well the Titan Company is doing. And that's something that we keep a track of, and we're very, very satisfied with these various parts. The lab grown is, your suggestion of why not is, most welcome. All I'm saying is that companies don't necessarily share what exactly they're planning to do before they actually do that, right?
No, how many quarters away are we? I mean, I'm not saying you're not going to announce it on national television. I totally get that. But how many months or quarters away are we from understanding what Titan is about to unleash here?
That's part of, keeping it close to the chest, isn't it?
Okay, I won't stress on that point. Let me come to the other statement that you made, sir. You were just telling Nigel, and tell me if my interpretation is right. Overall, when we talk about the jewelry business, gold, studded, non-studded, everything put together, you said 20% is a growth to expect. So, are you saying that from 25%, 20% could be the new normal?
If you go back and look at the growth rate of, the Titan's jewelry business over the years, we have been in that 20% ballpark CAGR for many years. So I'm saying if we do at this scale, if we do 20% CAGR for the next 2-3 years, for instance, that's a damn good growth.
But we shouldn't expect 25%. What I'm trying to understand is that we should then change that expectation from 25% growth year after year to 20% growth. Is that a fair understanding?
I'm saying that 25% is the growth that we delivered in Q3 of FY 25, right? Whereas you're asking me for future forward.
Yes, full year CAGR growth, full year CAGR. Yes, sir.
So I'm saying we had a 5-year or 3-year Titan turbo plan, which is in that 20% plus ballpark. So we'll be very satisfied at this scale to grow at that rate. That's all I was clarifying.
All right, Mr. Venkataraman, very quickly before we let you go, there was this buzz that Titan is on the prowl and you're looking at some inorganic growth. Can you clarify? Is there something domestically or internationally that you're looking at that we could hear about in the near future?
We're always looking at something or the other, and we will
what could the size be and how long, sir?
All in good time.
Before the end of this fiscal?
All in good time, like I said. Yeah.
We have to wait for the lab-grown strategy, for the inorganic, perhaps maneuvers. We have to wait a bit, I think.
Okay, all right, Mr. Venkataraman, it's been good speaking to you. To be fair, I had visited your Titan store in Bandra and quite impressive with regard to the analog watches you'll have as well. Everyone's going digital, but, some of those watches look quite good. So all the best on that front. We look forward to hearing from you on a whole host of those issues that we briefly spoke about.